Okay, welcome back to another daily update. My name's Steveruffley. Hopefully you've watched some of the many videos on my channel. So just a bit of a follow-on from the RBNZ the other day, and quite an interesting point I made, and it was that anything can happen. That Adrian Orr seems to come out and thinks he can do away with forward guidance. That somehow Australia and New Zealand are different. They're disconnected from the global markets. So I think the main thing was that obviously it went against the market expectation. The 25% rate cut was expected. So the New Zealand dollar, obviously, a lot of short-term money was attracted into it, and it was bolstered by that lesser, than expected. Well, no rate cut. So that was always already priced in. So a lot of people that were short would have had to get out. So that makes the market go up and even higher. So I kind of didn't anticipate it, as I said. To be honest, I was just, as I said, he's not my favourite person. I don't agree with his kind of tactics and the way he talks. But I wasn't really expecting to go against the market sentiment. But that didn't matter because what I said to you is, doesn't matter how high the New Zealand dollar went, I'd be selling it, and that's where I made my money. I made my money just in this pullback here in the spike down. So I didn't, because a lot of people look at this market and go, "Oh wow, if you bought that, you made a ton of money." Well, I did okay just selling it because, as I say, my view was always that no matter how high it went, the 50 basis point surprise cut that came in the last meeting almost brought the market to where we are now. So it was just the future expectations that were slightly adjusted. Now, at the end of the day, it doesn't mean that interest rates aren't going to be cut further. I still think they are. So what we saw is the market consolidate, pip up a little tiny bit higher, then came back down, and realistically, it came back down to the 50% and below. So time and time again, this very simple kind of strategy of looking for a strong directional move or an overextended candle, looking for that 50%, and that's where it's trading pretty much now. So you could have, got short. Obviously, they take some. Then it's the difference you see between the way I trade and that long-term trading. You could have got short anywhere around here, and eventually, by the time you kind of, waited for 24 hours, the market would have been down. You could have made some money. But all I did is just overlay this Fibonacci, figure out where the 50% was for me that the majority of people are looking at. I have my own iView charts, as you know, that automatically draws the fibs where we want. So I knew where the high point was. So I just continued to sell the high points. And again, look for that pivot below the key, 50%. It's always highlighted. And then with all the fibs swaying for. Didn't make a full 423 spot 6 retracement, but it was only a few pips off. So essentially, if you're just trying to make 10, 20, 30 pips, as I keep saying, then this is the perfect way to do it. You just look for a high point in the market and you can sell. You've got your 10, 15, 20, 40. There's plenty of opportunity to sell the moves for maybe 10, 15, 20 minutes at a time, or maybe just hold on for a couple of hours and make those trades. Now, the other one that I said was much more interesting for me was the pound. And obviously a lot of downward pressure that we've seen based upon, Brexit. But, the pound's been doing quite well against New Zealand dollar. So for me, again, I still think there's much more room up until 2.2, 2.3 that we can get to. So when you're looking at your kind of intraday charts, again, the same scenario. The market got hit heavily as demand, ploughed into the New Zealand dollar, came out of the pound, and then again there was money to be made. It hit my weekly resistance point here, completely. Again, another one that I very rarely do this, but I sold and I bought the pound against New Zealand dollar, and that's kind of the same trade. That's why it's quite difficult, again, because you shouldn't necessarily spread your focus or these fast moving markets. But it just because I'd seen an absolute perfect level in the pound, I bought it down here and waited for that pullback. And again, I didn't make the entirety of this move. I think I got about here. But the size I trade, that was fine, made plenty of money. And as I said, I just jumped into New Zealand dollar as it was spiking up. And that was actually an average trade. I traded about 3 or 4 prices up at the top and just took it all out for profit. It wasn't as big as the pound, but again, profit still profit. So net, I was in the trades for about 3 minutes, and I did quite well. But the whole point I made is that even though the pound got slammed after the RBNZ, there's still money to be made, and there's still money to be made, buying it low. So these spikes, and as the market kind of consolidated, made new low from here. But look how long it took. It took nearly a full day to make a new low from that point. So the market's absorbing that information, absorbing it, and saying, right, okay, what does a rate cut mean? Does it mean rates are going to go up? No, it doesn't. Does it mean that there'll be Slower rate cuts, potentially. Does that mean there won't be rate cuts? Probably not. There will still be rate cuts. Okay, so next one, meeting's in February, so a lot of time for the market to absorb this. Because it took so long, yeah, and didn't continue that downtrend, the most obvious point was for it to retrace. Now, when the market was about here, I put a tweet out and said I would be absolutely amazed if the market doesn't get to 50%. So that's bedtime in New Zealand land. I didn't keep it trading overnight, even though I knew it was a good trade. So, I don't always follow my own advice. And when I woke up in the morning, we're back at the 50%. And, that's a good move. You'd have made a good, from where I tweeted, a good 450 pips. As I say, I don't like going to bed. Even when I got stops in the market, I like to just kind of be at one with the world, just go to sleep. If I miss an opportunity, it's not the end of the world. The markets are spitting out opportunities every single day. So I tend not to hold trades overnight. So again, I'm much more interested in that movement. So pretty much just again, we're seeing the pound come slightly down, and the New Zealand dollar really just pipping back up, and it's no particular reason apart from, I would say, the technicals. You see the bias here is that we're oversold on my bias, so people naturally after a strong rally are taking some profit, and the same in the New Zealand dollar. We've kind of seen the market go up, go hit back down below that 50%, not hit the 423.6. So I don't necessarily think it'll go as high as the 50% and then start coming down, but maybe you'll see like a downtrend channel happening before these bottoms are taken out, and New Zealand dollar continues on that downward trajectory, because I still believe it's a race to the bottom with New Zealand and Australia for rates going to zero. And the minute someone kind of mentions quantitative easing, helicopter drops, and that kind of stuff, then it's certainly going to be an interesting time for the markets. But as I say, I mean, that's just one example of seeing a move, and then a day two later there's still opportunities based upon that move. It's all in the book, like the rough guide to trading that you can look at, and it's all about understanding that you want to get involved in the short term, but you want that trigger to give you that framework of where the pivot's going to be, where high value is, where low value is. As I say, you can sell into it, you can buy into it. It's whatever you want to do. At the end of the day, it's just trading. It's just looking for value. So really kind of just looking at the rest of the markets, there's not a great deal going on kind of data wise. We're still kind of hanging on for Trump and his trade wars. Will they, won't they? Stocks really just kind of consolidating. Gold looking a bit precarious, I would say, below that 1500. But as I say, the correlation between the stock markets and gold are a little bit off at the minute. Gold shouldn't be anywhere near 1500 if stocks are making record highs. It's just too high. But again, the pound's kind of consolidating and looking like it can break higher. Again, just looking for that more positivity from Brexit. Euro's too high. I don't see any reason for the euro to be high apart from the dollar being sold off. But I think the dollar will always bounce back. Interest rates are not. They're still going to be the world's global currency. So always opportunity around here to 50% in that euro to look for some shorts down to these lower fibs. And I would say maybe some good opportunities to break some levels and try and get back to 130 in cable, because I think the majority of bad news Brexit has been priced in, and now it's time to kind of look for the kind of the positives that are going to come out from this Brexit deal. The uncertainty that we've had for 2 years will finally be over, and everyone can stop pressing the pause button and get on with life. So there we go. That's just another quick update. I'll probably do one maybe on Monday, and we'll talk about the week ahead, the data, what products I'm going to be looking to trade, what's going to spike my interest. Again, open an account with Black Bull. No matter where you are in the world, you're going to be getting that 500 to 1 leverage, which is massive. Google me, go to steveruffley.com or steveruffley.co.nz. You can buy my book, look at some more videos, and again, I'm always on Skype. I've got live chat on the site. Anything you want to do, just ask me, and I will do my best to help you. All right, I hope you enjoyed it. Take it easy.